Today we are looking at divergence. I want to consider what divergence is all about, how to identify divergence. 1. What is divergence? 2. And how do we identify divergence? And in the subsequent video, we'll be looking at how we can trade divergence. Before this video, let's look at what is divergence and how do we identify divergence. Now, divergence simply means the disagreement between the price action on the main chart and the indicator window. What I mean in essence is, in a price scenario, for instance, in a downtrend, price will be going down, giving us a series of a lower high, a lower low, a lower high, a lower low. And when we're having this series of a lower high and a lower low, price is in a downtrend. So for instance, in our indicator window, which is this zone you are seeing, price is giving us a series of a lower high. Then you see the indicator as well coming down this way. Then suddenly, indicator begins to go up. Now, if you connect a horizontal line to this bottom, you realize that something has happened. That this particular leg is longer while this one is shorter. So, and this point out something to us. It simply means that if price is making a lower high and a lower low, the indicator window as well is supposed to be making a lower high and a lower low. But this disagreement is when price is making a series of a lower low. You realize that the indicator window will begin to make a series of a higher low. To begin to make a series of a higher low. So this higher low is contrary to what we are seeing on the main chart. And this is what we call a regular bearish divergence. In a scenario of an uptrend, it will be in this way. Price is making a series of a higher low, and a higher low, higher high, as the case may be. But when you look at your indicator window, you realize that price is moving up, and then suddenly indicator begins to make a series of a lower high. So if you connect your line, it will be looking like this, while on your chart it is giving you the opposite. So this disagreement between what is on the main chart and what is on your indicator window is what we refer to as divergence. And what this divergence means is that there is an imminent reversal in view. What I mean by a reversal in view is the fact that divergence did not occur immediately it is being spotted. It is a signal and it takes time to play out. So you must know that the fact that you spot a divergence doesn't mean it will play out immediately. It will take time for it to play out. And secondly, the higher the time frame, the stronger the signal. When I spot a divergence on H1, it is stronger than a divergence on H4. So the higher the time frame, the stronger the signal of the divergence. Let's look at this scenario. Here, price is giving us a higher high, So if we are to connect our trend line to this particular scenario, we will have something like this. Let's connect the top, right? This is what we are having. Here we are connecting our indicator window. So we'll connect our trend line to this peak. You can see that. Now, when you look at our indicator window carefully, we connect the peak together. Now look at what we are having on our indicator window. On our indicator window, the reverse is the case. You can see here it's giving us a lower high, and a lower high. But when we look at our indicator window, what are we having? Higher high, higher high, higher high. So there is a difference, a conflict between our indicator window and our main chart. And after that scenario, you can see how there become a change in price direction. Afterward, price begin to sell, and then you can see this particular sell happening now. But remember, the goal of this particular is not how to find entry, but how we can identify divergence. I remember I said earlier that whenever there is a series of bullish or a bearish move, we get a signal of divergence before any form of reversal. So that is what divergence is all about. Also, for a continuation, unlike in this scenario, here look at what is happening. Price is making a higher high, which is this one. Look at this. On this particular crosshair, we have this higher high. Look at it here. Okay, and then here a higher high. Look at the difference. So what happened? This is coming down while this is going up. So this as well is a divergence, and here this is a double confirmation, because in this scenario we are having a bearish flag pattern. So the divergence now confirm our entry for this flag pattern. You can see how price continued to the downside, and it was massive. Here is another one. Look at this bottom and this particular one, and then look at it. As tiny as it is, you can see the difference, and afterwards you can see how price change direction. So the concept of divergence is very important, and it plays out beautifully well. So you have to go through your chart, and then here is another scenario. At times in an equal low, look at this, right? Price is making is more of an equal low, and as you can see, but look at what the indicator window is doing. We are having a higher low, and a higher low. So this is how you can identify divergence, and you can see that disagreement between the chart and our indicator window. And once that is spotted, this is change in market or price direction. So this is applicable on anything that has chart. This is applicable on it. So it works. All you need to do, go to your chart, mark out your chart, find area of divergence, and mark those zones out. Train your eye to recognize it, and once you have mastered how to identify it, here we have a particular one playing out now, right? This, and then look at what is happening. You can see that. So when you train your eye to identify this thing, know it, and you will be amazed. First, let's get a crosshair to identify this top. Good. You can see this particular. Look at this top, and look at it here. Then look at this particular one, giving us an equal high. You can see that, and look at our indicator window. So this, and afterwards you can see that move. So this is all you need to do. Go back to your chart, train your eyes on how to identify divergence. On the subsequent video, we'll be considering how we can make entry trading divergence. Here we have another one. So this is divergence. Now for the indicator I am using, this is the indicator that I am using. I'm using relative strength index. The period is 9. You apply to close. The level is 90, 10, 50, 20, and 80. Then our commodity channel index. The period is 14. Apply to typical price, high, low, close. 3. The style is 2 pixels and the color is black. And that is it. I believe you have learned something new. Please do not forget to give this video a like, share, subscribe, turn on your notification bell so you'll be the first to get notified when we upload our next video.